Wall Street Week with Louis Rukeyser is made possible by the financial support of viewers like you. By the Travelers, insurance and related financial services working to provide financial peace of mind for American business. By Enron, providing natural gas which holds the promise for a cleaner world and a more energy-independent America. Enron Corp. and the Enron Foundation.
On ho-hum trading and near tangible uneasiness, the Dow went down for the first time since June, losing 42.5 points to close at 2709.54. The broader market indexes generally followed suit, though less dramatically, and the American Exchange Composite actually rose to its second highest reading ever. None of which impresses our elves, whose technical market index remains bearish at -3. With inflation appearing to be back under control and the U.S. dollar defying all efforts, including our government's, to bring it down, there was no discernible reason to buy the precious metals, and they retreated again. And here are two questions for you. Do you like your job? And if so, how old are you anyhow? A Gallup poll reported that most full-time workers are mostly satisfied with their jobs, but there was a much higher degree of grumbling among those born since World War II. Frank Cappiello, are you happy in your work?
Oh, yes, definitely. Yeah, been a very pleasant experience, Lou.
What do you think? Market just pausing for breath?
I think it is pausing for breath, but I also think that we're going through a rolling correction in terms of groups. We've pierced the bubble of one of the fastest rising groups recently, the airlines, and they're cooling off. The cyclical stocks seem to have flattened out, and a new group has replaced those, and I guess you'd call that sort of interest, maybe not interest sensitive, but interest related. The new highs this week were Sallie Mae and Fannie Mae, two rather attractive ladies, both of which are sort of related to interest rates.
Isn't there also some feeling that they may be beneficiaries of the savings and loan bailout?
Absolutely, yeah. And that's going to be an improvement, too.
Well, I have no objection to a rolling correction as long as we don't get steamrollered. How do we avoid that?
Well, I think what we'll be dealing with is something on the order of 100, maybe 150 points on the Dow. It's not going to be anything earth-shaking, but it's really going to be important to be in the right groups. You're going to have to move around a little bit. And this is the kind of market where the average person should stay out until the clear trend is sort of set going back up again.
I mentioned that the geniuses in the bond market, which of course in dollars is much bigger than the stock market, we're absolutely confused this week. So would you unconfuse them? Are rates going up or down?
Well, rates are not going to go up, and the trend will probably be down over the next 6 months. But I would not be a buyer of bonds, because I think this is the time when the stock market's going to divorce itself from the bond market. You're not going to make much money on bonds in the next 12 months. You're probably going to make a lot of money on stocks.
Jim Grant, when somebody says you're probably going to make a lot of money in stocks, I turn to you, confident that those words will soon be balanced.
Yes, I'll give you a list.
The strength of the market this year has somewhat surprised you, has it not?
A bit.
Do you think this can go on much longer?
Well, I've often said that it's going to end in 1986. So I suppose.
And if 1986 ever comes back, you may be right. But what do you make of the present situation?
Well, I think it's certainly notable that the pillar on which so many of these stocks is standing, as this pillar of speculative credit, is beginning to crumble. The junk bond market is a disaster. Well, that's overdrawn. The junk bond market is in bad a condition as the stock market seems to be. It's good a condition. And more and more you find that there is a kind of default du jour. A big issue is shot, taken out and shot. And the spreads between speculative grade debt and treasury debt are ever widening, even as the common stocks of debt-laden companies go up. So there is a massive divergence in the public's mind, the investment market's mind, between the stocks of precariously financed companies and the bonds are going down.
Is it fair to say that you were not the financial advisor to Merv Griffin?
He couldn't afford me.
How does not anymore? How does the average person deal with this? If they buy bonds, at what level of quality would you have them stop buying bonds?
I would kind of start and stop at AAA. There is, I think, so much there's so much damage yet to be done in the speculative area that you are not yet paid for the risk. So I would recommend short maturities and government securities at that.
John Dessauer, what do you make of what you've heard so far?
Well, I kind of come out in favor of Frank's opinion, and I'm not too worried about the total level of debt. I mean, we're in this period between August and October, and 2 years ago that didn't end up in a very nice way come October 20th, 87, so there are going to be a lot of nervous people around. The fear of the debt was the same then, the same now, but there are a couple of differences that impress me, and one of them is this very strong U.S. dollar. 2 years ago, the dollar was going the other way. Now it's too strong, and I think if it breaks above 2-to-1 against the mark, and it's right on the threshold of doing that now, that may force Alan Greenspan and the boys down at the Fed to bring interest rates down a notch. I think that would help the stock market and ease a lot of fears.
So the thing, in your judgment, that may induce them to lower rates is not a failing economy, but a strong dollar.
I believe Alan Greenspan and that gang when they say they don't want a recession, because I think some of the problems that Jim points out are an insurance policy. In other words, we all know what would happen if we had a serious recession, and so nobody wants one. And a strong dollar is one of the things that could tip things a little bit too far in the direction of recession. So I think Alan Greenspan and company would react, and they really want to keep the economy growing. They don't want to create a recession.
All righty. Now, this is the point in the program when we normally pause for a round of viewer questions. Tonight, though, we're saving that time for more questions with my guest, who offers us a lifetime of experience at giving provocative answers. Next week, though, we'll be back to our usual tricks, so send us your own money questions to Wall Street Week, Owings Mills, Maryland, 21117. That's Wall Street Week, Owings Mills, Maryland, 21117. Now, before we meet tonight's special guest, let's take a look at some of the wit, language, and insight he has given us in 24 elegantly crafted and invariably controversial books over the past 50 years. Here, for example, is John Kenneth Galbraith on money. Most things in life are important only to those who have them. Money, in contrast, is equally important to those who have it and those who don't. And here's his view on those responsible for economic policy. The task attracts a very low level of talent, one that is protected in its highly imperfect profession by the mystery that is thought to enfold the subject of economics in general and of money in particular. Inadequacy is protected further by the fact that failure is almost never at cost to those responsible. He said this about the stock market. The stock market is inherently unstable, the instability being related to its superbly orchestrated ability to attract people with a promise of effortless riches, give them a taste of such gains, give them the promise of a great deal more gain, persuade them that it is rewarding their financial acuity, or that of the people who are managing their money, and then, usually after overcoming some preliminary setbacks, which greatly add to the general state of confidence, destroy these illusions in one mortal thud. Indeed, he wrote of market disasters, "What is necessary for a new disaster is only for memories of the last one to fade, and no one knows how long that takes." On the other hand, he has kind words for optimists. Courage is required of the man who, when things are good, says so. Historians rejoice in crucifying the false prophet of the millennium. They never dwell on the mistake of the man who wrongly predicted Armageddon. Business executives often think of Galbraith as an egghead leftist. He doesn't speak too well of them either. He is the kind of free enterpriser who is steadfast in his faith up to the very point where money may be made or lost. Then, like most others, he rushes hell for breakfast to the government. Wouldn't you prefer an honest socialist? Would America really be better off with an honest socialist? And just what does John Kenneth Galbraith think of what's going on in this country today? For some thoughts on that, let's go over now and meet tonight's special guest, John Kenneth Galbraith. Ken, welcome. We're just delighted you're here.
Very nice to be here, Lou.
Have a seat.
What an
Please have a seat.
impressive gathering you have here this evening.
More so right now. I first met Ken Galbraith nearly 27 years ago when he was ambassador to India and I was a foreign correspondent stationed there. He was, as usual, creating interest and controversy wherever he went. As Harvard professor, as best-selling author, and as a tireless advocate of causes usually on the left of American politics, the Canadian-born economist has won friends even among those who disagreed with him because of his wit and engaging prose. Professor Galbraith will be 81 next month, and it's a pleasure to welcome him here tonight. Ken, you've never lost faith in the power of government to cure economic ills, but most of the country apparently has. How do you explain that?
Oh, there's no doubt about that, Lou. My generation is responsible through the Keynesian revolution, the welfare revolution. A great many Americans, a majority of Americans, have become comfortable, happy, and inevitably conservative, at least those that vote. And one notices that while people have lost faith in government, as you say, that doesn't apply to when some measure of affluence is involved. There's been no loss of faith in government when it comes to bailing out those S&Ls. No loss of faith in government as far as Social Security is concerned. Farmers are still committed to a very great faith in government for maintaining price supports and farm income. So I don't want to correct you, Lou. I know that you will get even next time when I'm not here, but I would point out that the faith in government is still very high, except as regards the most unfortunate of our people. And I would like to see a little more faith as regards them.
Not only do I not dispute you, I quite agree that the search for government aid seems to be near universal. Would you have not given the S&Ls the aid they requested, though?
I would not have deregulated them and invited the kind of insanity that has made necessary this bailout. I would go back and remind you of that error, as I reminded myself and in some writing at that time.
Would you not have bailed out Chrysler?
I testified against it at that time. I testified against bailing out both Chrysler and Lockheed, but I did it really, particularly in the case of Lockheed, because there were conservatives on the committee who were committed to it, and I was so pleased to go and talk about something which gave them real inner sorrow that I couldn't resist it. I remember coming out, can I tell a story?
Please.
I remember coming out of that hearing, and I'd circulated my statement in advance, and ran into Barry Goldwater, and he stopped. He said, "Ken, I've just read that statement of yours, and I agree with it." And I said, "Well, Senator, I now have doubts. I'm going to reappraise my position."
If, as you've just suggested to us, the reason for what you would interpret as a conservative turn in America is, in fact, the affluence that was produced by government policies earlier, how do you...
By my generation.
Understood.
Don't omit that.
Absolutely, by the geniuses of your generation.
Yeah.
How do you explain the apparent turn in the same direction toward freer markets, toward capitalism, even behind the Iron Curtain, where affluence is not a problem?
Oh, I think there's a very different situation there. A very serious point. These countries, socialism behind the Iron Curtain worked very well when it was satisfying primitive wants and when it was building heavy industry. After all, it built the second greatest industrial system in the world in the Soviet Union. But that socialism does not work for the command structure of the economy. The planned economy does not work when you get to the great multiplicity, variety, and constant change of the consumer economy. And as those countries have moved into the consumer's goods economy, they have had no real alternative to the market. I know that you read Marx regularly, and you may...
A few words before going to bed every night.
I know that you have never encountered anything in Marx which suggested that well-styled women's clothing and cosmetics and automobiles would be